Hello friends, greetings of the day. Myself Anurag Bharadwaj and I welcome you all at my platform of YouTube. Friends, recently the government of USA, the Donald Trump government has banned the minting of central bank digital currency, and the reason was quite important. Reason was the security, one of the main reason behind the same. And just because of that, the central bank digital currency or CBDC again became in the news. And now in today's video, we shall discuss about the CBDC of the India, which is the e-rupee developed by or minted by the RBI, Central Bank of India. So first of all, we shall try to learn what is digital currency. First of all, we will try to learn what is digital currency and the name central bank when added to this digital currency, what would be the meaning for the same. So the digital currencies are generally those which are developed based on the software, which are software based digital currencies, not in the physical form. They will be available there online only. They will be available there on the online platforms only. You can transact with those currencies. You can transact with those currencies from one application to another one. You can even scan the QR codes also. But the point is, they'll not be available in the physical form. So basically, digital currencies are those which can be considered or identified as one of the form of the cryptocurrencies, but although they are quite different from the cryptocurrency or the blockchain currency. The method could be same, the minting method could be same, but they would be some certain they would be some certain different from the original cryptocurrencies. And what is it, we will try to learn here in this video. First of all, we will see that the cryptocurrencies are those which are based on cryptography. And what is cryptography? Cryptography can be considered as one of the encryption and decryption method of message, or a kind of like software, or a kind of like currency, which would be between the two persons only. One, the minter person who has minted that particular currency, and second, the person who is possessing the currency, like we can say buyer or the purchaser of the currency. So for that, you will see that there would be a kind of like message. Let's say, for example, this is the kind of like monetary message, and this message would be blocked with the help of a public key. This message would be blocked with the help of a public key or encrypted with the help of a public key. There would be some certain kinds of slangs. There would be some certain kinds of like transcription of that particular message of the monetary, and there would be the requirement of a private key. Private key can be considered as a kind of like pin code, or a kind of like 4-digit or the 6-digit pin that would be held by that person who is the possessor of this policy, who is the possessor of this currency. And ultimately, whenever the person is going to fetch the information, whenever the person is going to transact that monetary, in that condition he will utilize that private key. So basically this whole thing is based on the cryptography, which is a combination of encryption and decryption. Encryption can be considered as coding, where you are transcripting the original message into the another form or another, we can say like way. And for that you will utilize a key called public key. Later, the person who is the possessor of the same message or the possessor of the same monetary currency, he would enjoy this private key. He would hold this private key, which would be required at the time of the transaction, when he is going to perform, when he is going to make that transaction there through the QR scan or other forms of we can say like other forms of banking system. So this is the kind of like cryptography. The whole CBDC is based on the cryptography, which has another form, which has another technology called blockchain. What is blockchain? Let's assume I have minted 3 coins, namely coin number 1, coin number 2, and coin number 3. And I have given the code for all the coins. Let's say hash. That can be the code for that particular coin, so that I can easily relate, so that I can easily maintain a chain of that coins, so that nobody can we can say like black money can be curtailed easily. Black money, to target the black money or to check the black money, that can be identified as one of the best method. For that, what I would do, same as the physical currency, you must have seen the number there over the physical currency. Same as that number of the physical currency, there would be hash number. and hash number, along with that there would be previous hash, and previous hash would be a kind of like hash of the previous block or the currency, and thus a chain has been created which is known as blockchain. Blockchain means the previous information would be connected with the further more informations to create a chain which is known as blockchain. So for example, you must have seen that the pack of the notes of like 500 rupees or the 200 rupees, you will see that there would be a kind of series of the numbers, and same series is followed there in the blockchain, where the hash and the previous hash would be there. Hash would be the original number of that currency, hash would be the original number of that like note, while the previous hash would be the number of the former note which was like associated with the further more nodes. So this is the kind of like system called the blockchain, which is directly associated with the cryptography, where the encryption and decryption would be performed on the basis of two keys, namely public key and private key. Remember, private key is that one which is a kind of like pin of 4 digit or the 6 digit required at the time of the transaction. Now there is a distributed ledger system also. What is distributed ledger? Distributed ledger system is a kind of like one of the method to check over the control or to check and control that particular currency or the movement of that currency. Let's assume you have transacted that currency to a particular person like vendor or the shopkeeper. You have transacted that one from your place to this one. So basically that information must be shared at both the ends. Like this one would be at your ledger and at the ledger of the shopkeeper or the vendor too. When the vendor is going to transact that one with the other one, that same information would be transferred there in the ledger of the third party. Same goes with that fourth party, so that this one would be required at the time of filling of the taxes, so that this one would be required at the time of the filling of taxes or such kind of like activities, so that there should not be any kind of possibility of black money. So to curtail the black money or to bring all the money there in the mainland or the mainstream of the society, mainstream of the economy, we require such kind of system called distributed ledger system, where each and every information must be stored there at the ends of all the nodes, all the persons who are involved in that particular transaction. So the combination of all three technology, namely cryptography, then the blockchain, and then this distributed ledger, this combination is required for the minting of a currency called digital currency. This combination is required for the minting of a currency called digital currency. Now we will see what's the difference between a common cryptocurrency or digital currency and CBDC, central bank digital currency. See, generally you must have heard that private owner, private vendor can mint or mine such kinds of currencies, digital currencies, which are known as cryptocurrencies, where those currencies are decentralized. There is no any control of the central government. There is no any control of the central bank called the RBI or the other institutions, so that their flow cannot be curtailed, their flow in the market cannot be controlled by anyone, and that's why they could create inflation, they could create hyperinflation, they could create such kind of situation to the economy which are quite rigorous, which are quite we can say negative in the nature for that economy. And that's why the government brought the concept of CBDC, stands for central bank digital currency. Now the central bank, for example, in case of India, the central bank would be RBI. Now the central bank called RBI would mine its own currency, and the name of the currency would be central bank digital currency. As I told you, this central bank digital currency would be minted by RBI. Now it would be like controlled, as it is a centralized currency, would be controlled by the RBI. It means its flow in the economy would be controlled by the RBI. This would be the part of the government, as RBI is one of the tool of the government. The trust must be built up among the people who are utilizing, in case of like bitcoins, in case of like Dogecoin, in case of other such kinds of cryptocurrencies which are not centralized. You will see there is a case of forgery, there is a case of fraud also. So that is why, in order to build up the trust among the people, the central backed up currencies are required, which is central bank digital currency. And this can be translated, this can be transacted between the financial institutions and the banks too, and that's why you will see the CBDC has two forms. One is for the common man. Second one is for the when we are going to transact the central bank digital currency in a bulk. that would be possible between the banks or between the financial institutions only. But when we are transacting that central bank digital currency in a kind of like retail manner, that would be retail CBDC or retail central bank digital currency. So it has a two aspect. One is for the financial institutions. It is based on the blockchain, as I stated earlier. There would be a series so that you can easily check and control that particular series, and nobody can pick that particular block in between of that series. Otherwise, that series would be like that series would be interrupted, and that's why it's not possible. Same goes with that. It is it is CBDC is legal tender. Legal tender in the sense it is allowed to be utilized or used there in the India. It is allowed or utilized to be utilized there in the India for the transaction purposes. And the last but not the least, it is cheaper comparative to the fiat currency, comparative to that physical currency, because no cost of the paper, no cost of the tree cutting is required. It is very easier one, because by the use of the software, you can mine such currencies easily. I will show you the denominations of these currencies there in the India. These are the denomination. All the currencies which are in the physical form here in the India, their denominations are identified under the e-rupee also. E-rupee means Central Bank Digital Currency of the India. It has the denomination of the 50 paisa, 1 rupee, 20 rupees, 50 rupees, 100 rupees and 200 rupees. These are the faces. 500 rupees and 2000 rupees are also there in the form of like e-rupee. And these are that software or the virtual form or the digital form or of those fiat currencies or those we can say like we can say like legal tender currencies which are already allowing there in the India, which are already working there in the Indian economy. So these are those. Now we will see some certain features of India's CBDC. Now we will see some certain features of the India CBDC. It's a legal tender. As I told you recently, legal tender means it is allowed there in the India. There would be same as the physical note. There would be the responsibility written there of the governor of the RBI. Like liability of the governor of the RBI, that I would pay that certain amount there, or I would like promise to the bearer of the note to get that particular amount. Let's say for example, if you have the 10 rupees e-rupee, 10 rupees e-currency, digital currency, then the promise or the liability would be developed by that particular governor of the RBI, and that would be in the written form that I would promise to the bearer of this note to get the 10 rupees or equivalent of the 10 rupees amount there from the economy. So it's a legal tender. And the central bank means developed by the RBI, controlled by the RBI. Liability in the digital form denominated in sovereign currency. Sovereign in the sense it's a like completely sovereign power of the Indian government or the RBI who is mining these currencies. No private entity, no other government can mine such kind of currencies apart from RBI, apart from Reserve Bank of India. Second is, it is a currently in pilot mode. Right now it is not like in a kind of like we can say like uniformly it is not being implemented. It is in a private mode, ongoing with the 15 banks of the India like ICICI, Axis Bank. Such banks are working since December 2022 to test and explore the uses, features and the technologies and application of the digital rupee. And now one more important thing, it is available in the same denomination as physical currency. Whatever the physical currencies are going on here in the India, whatever the physical currencies are working there in the Indian economy, these e-rupee or the digital currencies are also available for the same physical currency. As I've shown you earlier too, this is the picture of all those legal tender currencies which are already there in the economy of India. 50 paisa, 1 rupee, 20 rupees, 50 rupees, 100 rupees, 200 rupees. Apart from them, there is a note or there is a digital currency of 200, 500 and 2000 rupees. And 10 rupees and 5 rupees notes also. So these are the all things which are related to the CBDC, Central Bank Digital Currency. I hope you would like my video. I hope you would understand my video. And if yes, then please do comment, like, share and subscribe. Thank you so much. Namaskar. Dhanyavad.